Welcome to Mortgage Whining, where a bunch of mortgage people whine about mortgages. How's everyone doing? I've got my special guest this week is Tim Merritt, Senior Loan Officer out of Livonia, and as always, Michael Fisher, Branch Manager out of Brighton, Michigan. How is everyone doing today?
Great today.
So I'm going to pour some wine like we always do at this point, but we have a very special
There's
occasion.
only two glasses there.
There's only
There's
two
three of
glasses,
us.
as you can see. It's a very special occasion. We have a beer drinker with us. Normally, we don't make this kind of exception, but he's one of our favorites. So
I love you guys.
Straight out of the flower pot covered with dirt.
So we hit that on him, and he was actually, before we started, getting a little nervous on the fact that we were going to make him drink wine. So look at his face. You can't pay for laughter like that. So how's everyone doing?
Doing great, man. It's March. It's my birthday month. Like, everyone's just sending me gifts. So if you're watching this on the replay, it's still allowed. I got a couple more weeks.
You going to give sizes?
Oh, man. Yeah, it's just...
What about the new Erla? Everyone loves that, right?
I hear the tech companies are really loving it.
Yeah, I heard all the vendors are loving it.
I keep hearing the word integration issues.
Seems to be seamless.
Yeah. I keep hearing them say, just be patient.
Yes. I know where you're going with that. Everyone needs to be patient on the new Erla.
Yeah.
No, the integration has been fun, and it's been an obstacle, but that's what our mortgage business is all about.
Asking people how many years of school they have, and I cannot figure out where to enter it. Finally,
gone.
after a week, I realized I didn't have to.
It's gone.
That field is still there.
Cheers, everyone.
Cheers.
Bing, bing. All right, so what we typically do, Tim, at this point is we kind of pick a couple topics, and we just go around the room. And what we're really trying to do is reach out to the LO community, give them something that they can grasp onto, something that they can learn from. And if by the end of this podcast, they come out with something that they're going to implement in their own business, well, then we've done our jobs. Wouldn't you agree?
Perfect.
100%.
All right. The biggest question everybody's asking, and when I go on the networks and MLO Net and all the other loan officer networks that I belong to, the number one question is, if you're a loan officer in a rising rate environment, how are you handling it? Because, man, did we just come off a 12-month run. So what do you got?
My take on this is it's the same as it's been for the last 12 months anyway. You have a responsibility to bond with your client. If you bond with your customer and you provide them with excellent service and you provide them value, not just, hey, here's your estimate. You sit down, you go through the estimate with them, you provide them with that value. That's what's going to keep that customer with you, regardless of your price.
Relationship.
Yeah.
That's
Take
awesome.
price out of the equation.
And you got to love how the media is always behind the rates.
Oh, exactly.
When the rates were going down, the media was behind it, and the rates are going up, media is behind it. So they're just hopping on the internet, seeing what rates are out there, and those rates aren't even close.
Oh, no, not anymore.
Absolutely. So educating and being a referral-based, relationship-based loan officer. Michael, how are you doing it?
I've always found you got to be nimble. And the only constant in this business is change. I know it's going to change. Hopefully not every day, but certainly, maybe every month or every quarter or every season, if you will.
Sure.
And, we kind of knew there was going to be a change at some point. Rates would eventually turn around and head the other way. I was kind of getting down on myself when I saw some of the changes coming, thinking like, oh, I should have taken advantage of it more. I should have worked harder the previous year, all those kind of thoughts. Then I realized there's still quite a few people who didn't actually refinance.
Yeah.
And, I started seeing some of the industry stats out there, and with homeowners having as much equity as they've ever had, and a lot of folks still had purchased with rates in the high fours, and
mid-high
some cases
fours.
even 5. They may not be the easiest clients to get a hold of because perhaps they were so busy and harder to communicate with.
Sure.
But they're still out there, and I'm still seeing.
We were
I
giving
saw somebody
fours
come
last March.
Right.
We were giving threes and fours last
Somebody
March.
came into our office yesterday with a $200,000 loan with $100,000 equity, sitting at 4.875 with PMI.
Oh, jeez.
Right.
You know what, though? To throw a quick plug out here, anybody who has followed Barry Habib and has, access to his website, there are tools within there that you can sell. It's not always about the rate. To your point, the amount of equity that is sitting out there that's untapped. And how many people out there have went through this past year and maybe struggled a little bit financially. And now they have 3 credit cards, each with 10 grand balances, you know, and a car payment or a boat loan or whatever. If you're able to consolidate all those and put those into one payment, rate's not a question. They're not looking at rate. They're looking at just how much did you improve my cash flow? Again, take rate out of the conversation.
No, absolutely. And that's a really good point too, because we're here to educate our borrowers.
You know, it's funny that you mentioned that because Tim and I had a branch manager's call just this morning, and you know, you didn't join us there, but
I told everyone to be patient.
Did you get
Tim.
2?
But we were ultimately talking about using the MBS highway tools on that call, in which tools that we had used recently. I brought up the cost of waiting for the folks who were, oh my gosh, rates went up a little bit. I guess I'm going to keep renting. And I shared how I've used a few of those scenarios to show the homeowners, well, this is how much you're going to lose in net worth over time, you know, if that's the decision that you make. But
here's one of the things I always do in a rising rate environment. And yes, just for the record, Barry Habib is a huge friend of the mortgage industry, and his website's awesome, and I highly recommend it to anyone who wants to try it. But one of the things that I've always talked myself into, I've been doing this as long as you guys have, if not more, and one of the things I always talk myself into is this has to happen. If I'm a loan officer and I'm going to make this my career, well, this has to happen. If rates just stayed where they were, then all you'll ever do is purchases. So it's one of those things where you're absolutely right. Educate your borrower. Let them know what's going on. Use the tools that you have at your fingertips to explain to them how it happened. That's another thing too, is that a lot of times if you just explain to the borrowers, hey, look at the 10-year.
Yeah.
You know, I mean, all you got to do is go. I remember back in the day when I didn't have access to any of this stuff, I used to use CNN Money, CNNmoney.com. And I used to say, hey, go on to CNNmoney.com. And there's the upper right-hand corner, there was the 10-year note. I go, just look at that. And it's real simple. If that goes up, your rates are going up. And if that goes down, your rates are going down. And it's just that simple, you know? And it's just one of those things where when you did that, then it wasn't surprising to them. You know, even if you quoted them 2 months ago, they called you up and they knew. They said, hey, I kept a look at that, so obviously what's my rate now? You know what I mean? And it's not like this big sticker shock to them. So the bottom line is there's lots of ways to get through this rising rate environment. And I think that we can all agree the number one way is educating the borrower.
But exactly to your point within this, if you educate your borrower, if you explain to them, hey, what happened? Why are rates going up? And you explain to them the inflationary pressures that we're under right now, and that's going to continue to increase. But if you also let them know, because you've studied the marketplace, so you know that the forecast right now is that maybe in the fourth quarter of this year, we're going to see lower rates than we have right now. So if you act as their advocate instead of just an order taker, you know, we aren't Icken Loans, you know, we're here to be, you know, someone's advocate within this. And so explain to them why you're putting them into the program that you're putting them into, and why you recommend, hey, right now, I don't think you should take a 3 1/4. I think you should take a 3 1/2 and let me pay all your closing costs. Because I think in 12 to 18 months, I'm going to be able to refinance your 3 1/2 and put you into a 2 3/4. You know, yes, there's risk involved in that equation, but be their advocate, educate them, let them make the decision.
I like that. I like that a lot. Lots of good stuff there for the loan officers that are listening. So that's awesome. Good stuff. So I don't know if you guys know this, but inventory is bad.
Really?
Really?
Have you guys heard this?
Oh, wow.
Every offer my agents have submitted has been declined.
I love it. It is something that we're really struggling with. But as an industry, I don't feel bad for us at all. We have the ability to always go quantity over quality. We have the ability to, if we need more, we can get more, we can find more, and we can do more. I feel horrible for these borrowers that are out there shopping for a home, and they are in, I love the phrase multiple bid situation. How about like 14 to 20 per house? I mean, it is insane.
It's kind of like
right now.
Mosh pit bid situation.
It's insane
really
right now.
crazy.
So my question to you guys, and I'd love to hear your input, is how can we as lenders and as companies, how can we support them not only in making sure we put them in the right situation, the right product, and the right price, how can we help them win? They gotta win some of these bids short of, hey, go out and offer 20 grand more than it's listed for, because that's about what you have to do right now in order to get a house. How can we as lenders help these guys win?
My strategy is sometimes a little bit different than I think what other loan officers do. I try really hard to get to know as many of the agents in the areas I work in as possible. So, I do lots of loans in Metro Detroit and Livingston County, what have you. I try to put a lot of videos out there. I try to put myself out there on social media. I try to get a lot of agents to follow me on Instagram or LinkedIn or Facebook or what have you. I try to join every single possible real estate community that's out there in social media. And then I share content that would be relevant to the real estate community. So without just calling them all and saying like, hey, I'm a great lender, work with me, I try to provide some kind of value where they'll at least see me and know who I am. Then I know when my buyer's out there running around town, if they're putting an offer in somewhere around Livingston County, the odds are pretty good. I've seen that listing agent before. They've seen me. They kind of know who I am. They know my brand, if you will.
Sure.
I can usually get a hold of them, and right away they know that borrower has a super high quality, reputable lender, and it takes any questions that I can control out of the equation. I mean, I can't control the price that they're going to offer or the kind of financing the borrower is electing to use, but I can control my reputation and my brand in the local market as much as possible so that I give them every possible edge to get their offer accepted.
So increasing your self brand.
Absolutely. Yep.
And the more hands you shake, the more money you make.
Yep.
Go meet as many realtors
Meet as many
you
of these
can,
people as you can.
so that they know you
Yep.
and they know what it means for your name to be on that letter.
Well, and like we talked about on other shows, just like I'm doing here today, I can duplicate my efforts through video and through social media.
Yep.
So if I make more videos and I do more on social media, it's easier for them to see me over and over versus having to physically call thousands of agents every single month.
Gotcha. What do you got, Tim?
Well,
Help them win, buddy.
what I have seen, I've got an agent who works in, I'm going to say, your more moderately priced areas of Metro Detroit. He had a listing here recently. In 2 days, had 35 offers. So that's...
I don't even know how they go through those.
Exactly. I mean, I actually felt bad for him because he is a very good agent. So he's not one that's just going to, this one's the highest. He actually went through, and I mean, certainly 25 of the 35, they were able to discard right away. But those 10, I mean, he was literally on the phone with the mortgage person talking to him and this and that to evaluate what is the best offer for his, maybe it's not the highest offer, but what is the best, what's the best guaranteed close for his seller. But he and I have done quite a bit of business together. And I mean, I try to go the extra mile on all of these, not just his today, but anytime one of my clients is submitting a listing or submitting an offer on a listing, I pick the phone up and I call the listing agent.
Yeah.
Hey, what can I tell you about this client legally that I can tell them without violating the right to financial privacy? But what can I tell you about them? These are the things that we've done. We've pulled credit. We have examined their income documentation. We've examined their assets. We've run them through desktop underwriter, and we have an approve eligible in place. So we have vetted this borrower completely for you. So short of an appraisal, I can tell you with 99% confidence that we're going to get you to a closing table.
Yeah, I think that's a really good point. If you are just using a generic pre-approval right now, you're losing.
Yeah.
You've got to give more. You've got to help these guys win.
Back to the 35 offers, 0 phone calls from mortgage guys.
Yeah.
Not one bothered to pick the phone up and call the listing agent.
Yeah.
And I can tell you that this works because he submitted an offer on a client that he and I are working together with last night, and we got the offer accepted this morning. I called the listing agent, went through the offer or went through the borrower with them. Yeah.
So I just want to make sure I understand this because that's brilliant. So you're in contact with your buyer out there trying to find a house. That buyer puts an offer in. That buyer calls you. So before that listing agent can call you, you're calling him.
I'm calling them.
Them.
100%.
That's awesome.
So he'll say like, hey, this is Tim Merritt. You've seen my coworker Mike Fisher's videos. We work for the same company.
I do use that sometimes.
Sure, why not? I think that's really that's going above and beyond. And you know what the best part about all that is? how do you not all of a sudden gain a referral source with the listing agent?
Bingo.
If that listing agent knows you'll do that for your buyer, isn't that going to give that listing agent a better reason to use you the next time they need financing?
It's amazing that point that you're just bringing up there. How many business sources I've gathered over the past like 5 years of listing agents that are like, oh my word, you actually picked the phone up and called me?
Yeah.
You return my calls when
Sure.
I have questions.
Sure.
You send me emails with status on they're blown away.
That's
and I've done
awesome.
nothing more than what I would do for any other client.
That's awesome. That's awesome. A couple other really good ideas I've heard. Letters.
Yeah.
Write a letter. Like take your generic pre-approval letter, because obviously you got legalities on there. You have to have on there.
Yeah.
But follow it up with a cover letter. Explain about the people. Explain about their home. Quick story about myself. I mean, I bought a house, my second house I ever bought. I had a 2-year-old and a newborn. And I wrote a letter because it was a similar time, right, where we were all bidding for same houses and stuff like that. And I wrote a letter and said that when I went and saw your house, when I went through your house, I noticed you had pictures of a bunch of kids that are obviously now growing up. Just so you know, this is exactly the type of house I want to raise my kids in. And I got now who knows if I was the highest bidder or not. I don't think I was. I just offered list price. But I mean, I'm sure there was more offers out there at list price, and I got it.
Yeah.
So, I mean, these little ideas matter. And it's just right now you've got to be really creative to get these guys to win the bids, because the bottom line is the majority of the customers that talk to me are like, I'm getting tired of this. I'm going to go rent. I'm sick of losing out. We need to be advocates for these buyers more than we've ever have in the past.
But if you're not their advocate, what are you? That goes back to that service question that we were talking about earlier. Rate doesn't matter. If you pick the phone up and you've called that listing agent, and then you're back in touch with that buyer and saying, hey, I just talked to, Susie, the listing agent over there on Maple Street. She really likes your offer. We're keeping our fingers crossed. That person, is not gonna, 2 days later when you have a signed contract, then go shop you around to 15 different places.
And then think about your buyer's agent too. I mean, are they ever going to love you or what?
Oh yeah.
My loan officer helps me out. My loan officer helps me win bids.
Yeah.
That's awesome. That's great. Both you guys had really good ideas. I know.
Tim, I know sometimes you and I kind of go down this path of how we can be better for our nation's veterans, and I know when we have a VA bar, we actually do go a little further than just like a standard letter. We'll add a second letter, or we'll edit our original letter that's going out to the listing agent, and we'll break down some of the VA misconceptions and some of the actual statistics. The truth about VA loans closing at the exact same rate as conventional loans, exact same turn times. How the teams that we work with have a very, very good rate of closing them, and again, don't have a whole lot of denials.
Absolutely.
So that when we do make that call, like Tim said, or we do kind of make that connection, we can open up that conversation of, if this veteran's offer is going to net the seller as much as possible and it's really the top of the pile, are there any other reasons you see why you wouldn't take it?
The only reason a veteran should ever lose a bid is because he wasn't the highest.
Exactly.
That's it. That's the only reason a veteran should.
And that's my point. Try to uncover those objections.
It should be the only reason ever, because I always tell all my listing agents, I always tell all my buyer's agents the same thing. They're doing the VA loan because it's the best loan. It's that, and they're eligible for the best loan. If you were eligible for the best loan, would you not do the best loan?
Yeah.
It's that simple. There's zero reason why a veteran should ever lose a home unless he's not the highest bidder.
But
he or
it
she.
forever amazes me, to your point, it forever amazes me when you find out that the seller accepted a conventional offer over a VA.
Yeah.
You know what? There's lines in the sand on a conventional loan you can't cross.
Right.
It's a denial.
Right.
You have a VA, you have wiggle room. There's a lot of different things you can do on a VA. VA encourages us to find a way to make the loan. Fannie Mae and Freddie Mac, no. They will tell you exceed this, you're done.
Black and white.
It's black and white.
Absolutely.
It's a different type of loan.
But unfortunately, Tim, some lenders take that wiggle room and exploit it too much, and they don't close those loans as smoothly as they should. So as much as, in the past, I thought maybe it was the realtors and the sellers and listing agents, what have you, I realized it's us as an industry. It's
education.
We have people out there who are not closing the loans smoothly.
Yes.
And so next thing you know, you hear this story of like, well, that deal blew up the table. That VA loan was bad. The reality was it was a bad lender that didn't know how far that wiggle room was. And so they actually made the perception, they perpetuated that myth that it might be a bad loan by their own incompetence, if you will.
Absolutely.
Yeah.
We just, our company just won a VA loan where the estimate from the original lender who had VA approved them for VA financing had PMI on the estimate for them.
On the monthly payment?
Yes.
All right, moving on. That just makes me angry. Every time I think about VA, I think about our friend down in Tennessee, Alex, who says that what's he calls him? It's a specialist, right? Not an expert, because an expert knows everything. Be a specialist. Continue to learn. Continue to be better at your craft. And if you want to niche any of those products, VA, FHA, I don't care if you want to niche conventional. Go ahead and call it your niche. Go ahead.
Yeah.
The bottom line is know it. Just know it. Don't wing it. Be a specialist. Continue to be learning, and it can definitely make you successful in the future. So I know the answers to you guys because I'm totally cheating right now because I know you guys, right? But this last year, the number one phrase in the mortgage industry I've heard was low-hanging fruit. I don't care what anyone says. We haven't had to sell for 12 months. This has not been a wake up in the morning and go, who am I going to call on today? No, it's how am I going to get the 60 loans in my pipeline closed? That's what the last 12 months have been about. I personally never care when rates go up. It never bothers me because to me, it just gives us some breathing room. But it also makes me realize that what we're doing here in this podcast is we're trying to make other loan officers listening better. And my question to you guys is, how do you transition from that? And in case being, the company I'm at, we went from 75-25 refi to purchase on February 8th. We were 75-25 refi over purchase. As of 2 days ago, we're 65-35 purchase over refi. So, I mean, to me, that's just one of those things where guess what all of a sudden is going to matter now? Oh, you mean we have to close this date? I mean, we've been so used to refis where it's like, we'll close it next week. Yeah. No big deal. Now all of a sudden we're back to the grind, right? We're back to contract dates. We're back to getting this stuff in early. We're back to hounding our borrowers, right? We haven't hounded our borrowers forever. It was like, hey, we'll get to it. We'll get it done. Now it's like, no, you got to get this to me. We got a date we got to go to. So give me your guys', I know you guys are seasoned vets and you've been through this before, so this isn't new to you. How do you transition smoothly your team from a refi market to a purchase market? Not that we never stop doing purchases, but how do you do it?
I gotta be honest, I don't notice a difference. I mean, there is, whether it's a refinance or a purchase, there's still a sense of urgency. If you're a good loan officer, you're treating every deal the same way, okay? You're not just kind of going, it's a refi, I can close that next month. Because you know what? That refi is filling up a slot, if you will. We have a finite ability to close a certain amount of loans, okay? So
we all have capacity.
Exactly. So if I can close these 3 loans this week, that frees me up to close 3 more next week. So my team and I have always treated each one of these the same way. Let's get it through the system as quick as we can. Whether it be a refi or a purchase. I've got a lot of purchases that now we're 10 days out from the closing date on the PA and we're clear to close. And that's the way it's supposed to be.
You must work for a great company.
Yes, I do.
So
I did say that, Tim Ross.
That's a great point. So now help me out because maybe I'm asking this wrong, and then I'll get to you, Mike. The bottom line is we can all agree we really haven't been selling. We have been, but we haven't been, right? I mean, we all sell. We do it every day. We're salespeople. It's what we do. But now I've got to go, well, let's put it this way. How many new referral sources, and it's okay if the answer is tons because you guys are amazing, how many new referral sources have you made in the last 12 months versus how many you think you need to make in the next 12 months to do as much business as you did last year?
Now, I will agree with your point there.
Yeah.
There isn't nearly the low-hanging fruit, as you put it, that was out there for the last 12 months. We are going to have to go back to selling. What the last segment we were just on is just pure selling. It's working with the listing agent to sell why your buyer is better than the other 34 that put offers in. The same principle kind of applies. We have to be better with our clients up front so that rate doesn't become an issue. We have to spend the time with them. So yes, it is going to change what we do, but the process of the loan itself, we still have to have that sense of urgency, the same as we had last year.
I agree with that.
Get them through the system.
I agree with that. What do you got, Mike?
Well, a couple things here. Number one, transitioning over to purchases, if you will, in some cases, there's a lot more pressure than there would have been a year or two ago because that listing agent had so many offers on the house. So that concept of like, hey, I got to make sure this lender's performing because there's a huge pile of backup offers and they're all calling me night and day. And then I got this guy over here who doesn't even seem to have ordered the appraisal yet. That doesn't fly in this market.
No, you're right about that.
Yeah. So, you have to be as sharp as ever when it comes to communicating, keeping things on time. And I'm not seeing that the contract timelines are that much shorter, but I can tell you that the agents are certainly not very patient about doing any kind of extensions on a purchase. So really important to be sharp with the timelines. And I think, as you mentioned with Tim, that concept of, well, I can just close it whenever with my refi. I mean, that's got to go away.
Sure.
But I think the reality is it's a fantastic time to transition into being more of a purchase-based loan officer if you hadn't been in the past. Because I think those of us, like Tim and myself, who had to survive on only purchases and maybe lived through some real tough times in 07, 8, and 9, understood that, like, hey, I've got to do all purchases because the refi market's not that great. So those of us who've been there,
ramen noodles again.
Yeah, those of us who've been there before. I mean,
I
we've
can only
already
eat hot dogs once a week.
Yeah.
We've gone through these different phases where we had to learn direct consumer marketing or realtor Finney marketing or what have you. But I think the cool thing about this particular section of the market, in this shift, if you will, is that it was precedented by a time when you got to talk to everybody you knew and every agent you knew and every borrower you knew about mortgages. So I've just spent the last 14 months talking about how cool mortgages are to everybody. What I got to do now is continue to stay in front of those same people and remind them that I'm the person.
Yeah.
I'll still talk to you about rates. They're up. Maybe it doesn't make sense. But who do you have that that's buying?
Yeah.
Who can you help connect me with? Are you going to buy a second home? I just got to go a little deeper with all those people I just met. I mean, like, I'd never had a better time in my career to talk to all those people than last year. So that was a huge blessing moving into this market to have had all those conversations last year.
Yeah, I think we've all seen this before, right? For those of us who've been in this for 20 years, which I think all of us have, this is our fifth one. I actually did the research, and this is our fifth one in 20 years where we had an absolute boom, right? And what I've always done, and I always love watching other people try, is I could care less what you did last year. It does, as a loan officer, I don't care. I don't care that you had the best year ever, because quite honestly, if you didn't have the best year ever last year, then I don't know what you're doing. I care, and I'm so impressed with what you do this year. The people who can take what they did last year and don't look at it like it was given to you, but look at it as like you learned how to do that much business and keep your sanity and be able to do it again this year in an environment that doesn't just hand it to you. Those are the true loan officer badasses.
Tim, to your point, my wife doesn't give a shit what I closed last year. She wants to know what my check next week's going to look like.
Yeah, 100%. 100%.
So what have you done for me lately?
So true. But it's true, right? I mean, it's like, I remember, like, I started in a refi. I started in 2001. I started in a refi boom. And I remember when the refi boom was over, I'll never forget it. I remember going to my, at the time, boss and great friend and saying, hey, what do I do now?
Yeah.
Like, I liked what I made last year. That was fun.
Yeah.
And I remember I made 70% less. And I told myself, I will never do that again. ever. I don't care if I got to work 100 hours a week. I'm not doing that again. And from that point forward, I always prided myself on the year after a refi boom. I won't do what I did last year because you got to give credit to where credit's due, right? It was given to you. But I'm going down 10, going down 15 maybe. I'm not going down 50%, you know?
Any LO out there that has, any degree of pride in, what they do and where they were at and whatnot, that didn't have, didn't have a tremble in them at the beginning of February this year, is kidding themselves.
Yeah.
I mean, I looked, I was looking at my pipeline and looking at everything, and I'm like, I'm not going through this. I got to do what it's gonna take to rebuild my pipeline, regardless of what's going on.
Right. That's just part of the section where we fill up our glasses.
Yeah. Do you have two of these?
I'll find another one.
So, Tim, one thing I've also found is that, in this quote unquote transition or shift, the cool part about it, hopefully for folks that are watching this and maybe for us in this room, we had that chance to go through and learn what our true capacities were.
Mm-hmm.
Yeah.
And we probably identified some weaknesses that we had in capacity and in how we spent the time in our day. And hopefully we perhaps generated a little bit of extra revenue and or realized like maybe I can grow my team a little bit.
Yeah.
And I think, some people would look at a time like this and say like, oh man, I'm watching these call centers lay people off and I'm not sure what to do. And I'm looking at it in the exact opposite. I'm like, what a perfect time to grow.
Absolutely.
Because I just had, like I said,
perfect time to find some of those guys that know how to spell mortgage, bring them in,
right.
make them LOAs.
It
Right.
is
And
an
let me
there's
stay in the
never
sales
been a-
lane.
There's
Let me stay in that
never
sales
been
lane.
a more perfect time to grow as a company because it's funny. It's like we were forced growth last year as LOs and as companies. We were forced growth. We were forced to grow, and it was hard. Everyone was taken. You couldn't find anyone. You couldn't get anyone to leave. You couldn't, all that kind of stuff.
Companies were stealing our staff.
So the ones who take the opportunity to grow this year, think of how much easier it is. I mean, layoffs are a common. I heard like 70 to 150 people at Chase the other day. I mean, there's the layoffs are coming, right? I mean, the minute these rates, and listen, this isn't a surprise.
Yeah.
We all we know how this works.
We know that it doesn't last.
It doesn't last. It doesn't last. So take the opportunity. There's an opportunity in every event. If the industry sees it as bad, good, or indifferent, it doesn't matter. There's an opportunity. That's why I always tell everyone at my company, I hate the word failure. I just look at it as an opportunity. If we failed at something, make it an opportunity to learn.
We were talking about listing agents and selling listing agents and how you can make that listing agent your next buyer's agent.
Yep.
Okay? Put yourself in their shoes. Far too many people just look at that listing agent as the one that's holding the gold.
Mm-hmm.
Get them on the phone if you can. Empathize with them. Hey, I realize you're struggling. You got 29 offers to go through with your seller. It's going to take you half a day. I'm here, this is what I can tell you about this client, but put yourself in their shoes a little bit. Understand where they're coming from. Understand the pressures that they're under from that seller. Because every seller out there right now thinks their house is worth 20% more than what it's actually worth.
Mm-hmm.
And they've got to somehow bridge that gap, get a deal put together. Understand that and talk to them about that.
Sure.
You'll win them, you'll be their next buyer's agent.
Sometimes too,
Convert
Tim,
'em.
you can train those buyer's agents because sometimes the buyer's agents need help presenting that offer too. Like I've had a couple of cases lately where I've gone to the buyer's agents and said, look, you're probably putting in a fair offer from what I can tell, but make sure that listing agent knows, your borrower could show proof of funds. They could potentially pay over list price. I mean, they could potentially do a guarantee. I'm not going to get into that part of the offer. That's not my job, or I'm not licensed to do it in this case. But I'm just reminding you that all these things can make a difference. Just because the client's information is private and we're not supposed to share it, et cetera, if the client chooses to divulge that they have assets and that house is selling, overpriced, and you come in and you say, look, this is my offer, this is what we're willing to pay over appraised value, but I'm also going to show you some proof of funds here so for a fact my people are amenable to work because we've got money behind us. We're not playing games. And so, helping coach the buyer's agents occasionally and
double your referral source,
absolutely.
double your business. It's that simple. Absolutely. All right. So I saved my favorite question, my favorite topic of this
beer
podcast. Nope. I don't have another beer for you. I promise I'll get you one.
No, I mean, favorite topic.
Well, we're not going to talk about that yet. So margin compression. We all know it's coming. We all know, I guarantee you, all of us has seen an estimate in the last week where it's like, huh? You're like 2.5 points off, half a point, whatever it may be. The call centers always start first. They always, dip it down real low so that they can kind of crush us and all that good stuff. And most companies, we're a little, most companies are a little slow to the race, but they'll get there. My question is simple. Why are you worth more? Why? And first off, let's all agree that nobody's worth 3/8 to a half a point more. It doesn't matter. But I would never sit there and say that I work for a company that has the lowest rates, but I'm worth every penny. So why are you worth more? Why do buyers want to work with you other than what we all just talked about? But help loan officers who are looking at this, help them explain to their buyers why they're worth more.
I'm going to go back to what I said before. Be their advocate. Explain to them and educate them. Make them realize the value that you have. You are not a call center. You're not some loan jockey who's sitting behind a desk with a headset on who, okay, you want a 30-year fixed. Okay, here's our rate. And just spit it out. Talk to them. Find out what their needs and wants and desires are. And then explain to them, hey, here's the way that you could do this over here, or maybe here's another suggestion for you. We put you into a 25-year fix because it's the same payment.
Sure.
Work with the client, educate them, explain to them how the market works, why rates have went up, what to expect over the next 3 months. Educate yourself on the marketplace. Okay?
Another thing I love about what you said that you could totally use to say why, just from how you've answered these questions, I'll tell you why I'd work with you. Because I want that house. And if you're telling me that you're going to get me that house at 3.25 and that I'm going to have a 40% chance of getting it over here at 3%, I'm using you every day of the week. You know what I mean? That's why I'm using you.
That guy at the call center is not going to call the listing agent.
No, 100%. And this isn't about your lowest rate. This is about getting you a house during a low inventory time. That's great stuff. Mike, what do you got?
One thing I've learned over time is that I can learn everything under the sun about how to sell my own value. But one of the biggest challenges is that the approach that I take with each individual may or may not work with them because of who they are as an individual. So one thing I've really tried to do the last 3 or 4 years is just ask as many questions as I can to everybody I'm working with and really get to know them and really try to figure out how I can actually help them. Sometimes the way I help them is maybe something every other lender didn't think about. Hey, Mr. Borrower, we're submitting this offer today. It sounds like it's pretty close to getting accepted. I'm going to do everything I can to close this on time. I did some analysis on your credit. I got you pulling at 720 right now. I don't know if this is going to work for this transaction, but I also did an analysis on your credit. And, I'm kind of noticing a couple of things. Like, number one, if you pay these cards down, I can get you to 740. This might save you an extra $18 a month. But also, when you're buying this house and you're telling me that you're putting X amount of dollars down, maybe you should hang on to that and pay these credit cards off because over time, I think this is what the math would look like.
Yeah.
And then I also noticed how much money you got over here. Maybe we should talk a little bit more to this local financial advisor. And, I got a couple insurance guys to work with as well. So I do everything possible to ask all the questions and to analyze everything that's going on with that borrower so that it gets to the point where they almost feel guilty talking to me about what another company's offering.
Yes.
And when they do come back and, hey, I've got this other deal and I got this other lender, and I try to make sure it's a legit offer. But the one thing I've done differently the last couple of years is, when somebody is kind of asking me to go low or price match or whatever, I just have an honest conversation with them and I just kind of ask them what they think is fair. And most of the time I'll counter offer and I'll just say, well, if I do this, you're ready to move forward today and stick with me. And have I provided with you a lot of value? And have I done anything, to make you think I wouldn't do this all the way through the end of the process and for all your family and friends and any future transaction? I make them recite back to me what I've already done for them And I kind of get them to think about the value I've provided them versus what somebody else might have provided them.
Acknowledgement. Yeah,
Absolutely.
Acknowledgement
Yep.
of what you did.
But it only works if I spent the time asking more questions, going deeper, getting to know them, pointing out the referral sources that they know, how they met me, and building a higher level of trust, if you will.
Yeah.
So you're saying not tell them to hop on their camel and go back?
No, we're not going to do that.
We're not. That's good.
So it's a really good point. In 2021, my slogan is every unit counts. I mean, we need every loan we can get. I mean, we are faced with statistics that state we should do 40% less, right? So I for one do not believe that the people that I employ are even going to be close to that, because
that's still a good paycheck though, Tim.
I just employ a lot of good seasoned loan officers, and they're not going to do that. However, one of the things that I would tell every loan officer, especially new loan officers, because I see this happening in our company all the time. If you know you're going to get shopped, encourage them to shop. Is what my motto is, because here's why. Tell them, hey, go out, shop it if that makes you more comfortable. Just do me a favor. Show me what you got. Show me what you got. So many new loan officers don't have the opportunity to win the business because they give them the rate, they give them their price, and they go away. In this transitional time, most companies will do what they need to do to get the business. And the bottom line is, by no means would I ever say, quote high or anything like that. Because of compliance reasons, we just can't anyway, so it doesn't even matter. But too many times I watched new loan officers lose business because they never told their customers to come back and see them. And then it's real simple too. Hey, I want to be your advocate not only into buying this house, but I want to be your advocate on your loan. If you get a better deal, I'm pretty confident I got the best deal here. If you find something better, bring it back to me. And I'm going to tell you one or two things. Either one, I'm going to tell you, hey, that's pretty good. Go take it.
Yeah.
Or two, I'm going to say, here's what you're missing. Here's this, here's that. And my deal's still better. Or, you know what? I'm going to take that to my secondary and I'm going to be able to see if I can make that work. Too many times I watched loan officers new in this business give out estimates and not say a word and never hear from the person again.
It goes to follow up though, man.
Yep.
I mean, you got to pick the phone up.
100%.
If you're not putting on your calendar, I know, the Jones and the Smiths put offers in yesterday. Okay. I'm not doing my job if I'm not calling their agent today and finding out if it was accepted. And then if it was accepted, I need to be calling the Jones and the Smiths today and say, hey, congratulations, and explaining to them the next steps. If you stay in front of them, they're not going to shop you.
Yep. I agree. The more relationship you build with them, the less likely they're ever going to shop you.
One last point to this, though.
Let's hear it.
Long time ago, many, many years ago, I have a bit more gray hair than you do.
Barely.
One of my mentors in the business, I brought him a deal in, and I was a young pup, still wet behind the ears, and I'm like, hey, I got this deal, and this is what they're offering them. I want to keep the customer. I'll never forget. He looked at me. He says, you know what? No. He says, we're in this business to make money. And he goes, we all are. And he says, I'm not going to do this. This is practice, because nobody gets paid if we do this deal. And he goes, I've been doing this long enough. I don't need to do it for practice. Give me something that's going to make money.
No, that's absolutely true. I mean, if I'm a new loan officer in this business, that's something they have to understand.
There is a line in the sand where it doesn't make sense for your company to do that deal just so you get paid.
It is okay to say
stupid.
no. It's
Yes.
okay to say no. Absolutely.
And, Tim, we've seen a lot of different methods over the years of folks that have been able to get through those objections, if you will. Our good friend Troy, who worked with us in the past, and we talked to him a lot and tried to invite him today, actually. I know what he used to do, and I've tried to adapt it. I don't think I did as good as he did, but especially in turbulent times, but pretty much any time of the year, he would take all the pre-approved borrowers that he had and make sure that he was sending them at least one MBS update a week with his own personal commentary on what was going on with the markets. Then when those buyers went under contract, it was easier for him to have a conversation about the markets and about pricing and about competition. And, he set himself apart as an advisor.
I love it.
I know Barry uses that word a lot, but he uses MBS Highway. He pulls those reports, he reads them all, and sends a little snippet to all of his pre-approved borrowers every single week.
Absolutely.
Yep.
I love it. We're going to end on that. We're going to end on advisors, because that's what we are, right? We're here to try to advise people on buying what I always call the lowest frequency, highest risk purchase you're going to make in your life. And I'm sure someone could fight me on something else, but I bet I'm right 99% of the time, you know?
Here's to selling long-term debt.
Here's to selling long-term debt. Tim, I got to ask you the question. How was the M43?
Oh, it's a delicious beer.
Is it a delicious
It really
beer?
is.
I had never heard of it. I had never heard of it, but I know if it's a beer I've never heard of it, I knew you would like it.
Oh, I've been to their brewery. It's right on Grand River.
If you're not from Michigan and that's the first time that you're seeing that, oh, you got it. If you're into IPAs,
You know the M43.
oh yeah.
Oh, it's a beautiful.
Oh, yeah.
That's beautiful. I got to get.
It's
it
not
a
the
beer
cheapest
more.
beer you're ever going to buy, but
I
it is
got-
definitely one of the best.
I gotta
That's
get.
probably about a $4 beer right there.
Oh, you owe me. So, thanks for taking the time, guys. Tim, thanks for coming on.
Cheers.
We really appreciate it. You gave us some great stuff. Loan officers out there who are listening, I really hope you get something out of this. There's a lot of input, a lot of data. Use some of it. Hit us up on Facebook. Talk to us anytime you want. And here's to whining about mortgages. Cheers, everyone.
Cheers.
Cheers.